Be fearful when others are greedy. Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of March 21st, 2016. I'm looking at this article here. This is from a couple years ago in Seeking Alpha. The title of the article is Fear, Greed, and Market Tops, and they are quoting Warren Buffett. The entire quote here is worth taking a look at. It says, if they insist on trying to time their participation in equities, then they should try to be fearful when others are greedy, and greedy only when others are fearful. Well, that's a pretty interesting comment. And let's look at the current CNN Fear and Greed Index. So this is a really interesting index. And I'll just give some context here. I look at this kind of stuff. I love reading these kind of articles. And they can create an expectation for me to watch for things in the market. But that's an unfounded expectation until it happens. So I trade the realities of the charts. And we're going to look at the charts and look at what the realities are. But these things are super interesting. And again, they can create an expectation, but I don't act on an expectation. I act on a reality that is being proven. And I think there's some stuff being proven, but this is some fun stuff here. So we are right now, the fear, if I can stabilize my chart, my page here, the CNN Fear and Greed Index, it's a pretty cool thing. It says we are right now in a period of extreme greed, and we have been for a couple of weeks. Now that's pretty interesting. A month ago we were in an environment of fear. If you're interested in this, just Google CNN Fear and Greed Index. You can read all about how they calculate it. Now this other article, who's quoting Warren Buffett, again, it's a couple years old, but this author has done some research and says that periods of extreme greed historically have come right at market tops, and that they preceded drops in the market. Now that's really, really interesting. Now here's another article from the Wall Street Journal. I love this this headline: the 3 worst words of stock market advice. Trust your gut. And the author goes on to make a really interesting case. This is a useful article. It's worth reading. So you can just Google, 3 worst words of stock market advice or something like that. You can probably find it. This author goes on to make a point that when they survey people and ask them what they think the market is going to do, it is super highly correlated to what the market is doing. So if it's going up, they expect the market to go up, and if it's going down, they expect the market to go down. And that correlates with that Fear and Greed Index as well. All right, so this is interesting stuff that we're at this time right now of extreme greed in the market. We have a couple of research efforts showing that when we get to a period of extreme greed, that the market typically will turn down, that the expectation that it's going to keep going up creates greed, but it's not the reality. And we have Warren Buffett saying, hey, when everybody's being greedy, that's a good time to get fearful. When everybody's fearful, it's a good time to get greedy. Let's go take a look at the charts now. So here is the S&P 500 chart. This is a weekly chart. And if you've been following my updates for any period of time, you know that I think we're in a bear market. And that has not changed, despite the fact that we've gone straight up now for 5 or 6 weeks. Now, again, if you've watched before or not, I use Elliott wave, and this is so clearly an Elliott wave 3, an impulsive wave. And I use Dow theory to tell me when the trend is changing. And Dow theory simply says that the market moves in a downtrend, lower lows, meaning it goes down lower, and then lower highs, it goes up, but it does not go above the previous high, and then it goes down to a new low, and then it goes up, and the expectation then is to come in and put in another low, right? And the uptrend, of course, is higher highs, higher highs, all the way up. Now this pattern, lower lows, lower highs, lower lows, lower highs, so far is completely holding. We would have to go up above this previous high for me to stand back and say, something different is going on, that the pattern has been broken. Now we're reaching up pretty high, but I want to show you something else really, really interesting on the S&P 500 daily chart. So let me zip over there real quick. So this is the S&P 500 daily chart, and I'm zoomed in pretty tight so you can only see, back to the middle of of last year. So every price bar here is a day. Let me show you something that I was just analyzing earlier. There's a thing in the market called symmetry. When you can see similar patterns in price and in time, there's a high probability that those patterns can repeat themselves. So here's a pattern that I see. This move up, last summer we had this pretty dramatic fall, and the move up from that, which really started here in the the fall into the autumn, this move up here lasted exactly 25 days, and it was 245 points up on the S&P 500. Now this move that we've just seen starting in mid-February, after this dramatic decline in late December and through January, this move up here, guess how long this is? It's hard to draw a straight line with a mouse. 25 days, 221 points. That is extremely similar. That's nearly identical to this last one that we just saw. Now, are we going to see, this kind of move down again? Can't guarantee it, but as we bring things together, we say the fear and greed index is really high. Historically, that has precipitated a decline in the market. And we look at the realities of the charts that we're still in a bear trend, that we've had a very extended run up here for 5 weeks or something. And we have this similarity in patterns that have happened before. How many times have you seen a move in the S&P that just keeps going and going and going forever? The market does not move in straight lines. So I think we are getting ready very soon to see this turn around and head down. Now, will it do this and put in a lower high and then a new high and go on and make new highs? I don't think it's likely. It's possible, but I don't think it's likely. I do think it is much more probable. Remember, we were just looking at the weekly chart, that this bear market is still intact. This has been a pretty remarkable run, but the highest probability is that it's going to turn around and head back down and start putting in some lower lows, lower highs, and eventually head on down and take out this low here. It'll take some time. This has to prove it. So I can't go I couldn't go short on the S&P right now, because the reality is we have to see this proven. We have to see it turn down, put in a low, put in a lower high, and go take this low out, and that will take a little bit of time. Now, individual stocks may have that pattern beginning sooner than the broad index. Remember, this is 500 stocks. But this is, I trade the realities of the market. I fully expect this to turn down pretty quickly. It'll have to prove it before I start placing trades on the S&P 500. And if it does prove it, you can bet I will be placing trades against it. But let's watch it play out. It's really, really interesting, and we'll just have to see how it goes. But let's take a look at gold and then oil, like I do every week. Let's update those, because there's some really fun stuff going on there. So here's the gold futures chart. If you've been following for a while, about 6 weeks ago, I said, hey, I see this pattern forming. Gold had been in a big long downtrend for several years. It put in a channel here at the bottom, and then it had a higher high, higher low. I said, boy, if it breaks above 1113, I think it's going to take off. Well, and it sure did. Right? It closed today at 1254. Pretty nice run. And we've been placing trades on gold mining stocks, gold ETFs and stuff in my stock picking service, and they're doing phenomenal. We're just making really, we've made profit this whole time up. We're in over 50% profit in some of those trades, and they're not closed yet. So this run, it's getting a little choppy up here. This yellow pyramid, if we go above this and put in a new high, this will turn green, and then the next support level for gold will be here about 1225. Now it could pull back a little bit. That wouldn't be unexpected before heading up. Now if you remember, I've showed the gold weekly chart.
Bearish reversal bar entry now.
There's my software talking to me. We expect the recovery in gold. Remember, here's this multi-year pullback. These are Fibonacci levels. We expect a corrective wave up to 38.2 to 61.8 Fibonacci level. That takes us to 1347 to 1532 on gold. So it's got a ways to go yet. It certainly could pull back before going up. Remember, things don't move in straight lines. Higher highs, higher lows, higher highs, higher lows. But that's what's going on with gold. We'll have to keep watching it, but we're long on gold for the long term, and we're in some shorter term trades like I talked about. So gold's looking great. Let's look at oil now. So here's oil on the weekly chart, coming down from a high over 140 down to a low under $30. It got under $30. The Fibonacci recovery retracement zone for this one, 38.2, 61.8 Fibonacci retracement level takes oil to 62.97 to 84.87, midpoint of 73.92. Let's look at it on the daily chart. I've been updating this, and I've been watching this for a long time.
Strategy
Bullish
alert.
pyramid trading point entry now.
And there goes my software again. I had been saying, boy, it looked like oil put in a bottom. It put in a new low here. It pulled up. It put in what's called a lower high. It did not go down lower, a lower high. And I said, boy, if it goes and takes out this level here, if it goes through 37.09, that looks to me like the recovery is underway. Well, it blew through 37.09, pulled up just a little bit, and now it's heading up again. So I think this recovery in oil, it is underway, and we're already trading. We've got some good trades on in some energy-related companies, even some alternative energy-related companies, and the ETF for oil. So USO, the ETF, that's a good way to trade oil. There's lots of energy-related stocks, and I've been on record, I think, for a couple weeks now that the oil recovery is underway. It has started, and I think it's heading up to those levels that I talked about. And this could take off just the way gold did, because it's a very, very similar pattern. Oil's a go, man, and it's pretty fun. We're going to keep watching this, and we'll keep giving updates on it. So stay tuned. I'll give updates every week, and send me questions if you have any or comments. You can comment on the YouTube video or just email it to me, Dean@followmetrades.com. Thanks, and we will catch you next week.